So let's get started. And let's hear, Ron's done this drill before, so maybe we start with him. He seemed a little energized this morning. He
Yeah.
had coffee. So, yeah, so.
Are these working?
Yeah, so give us an opening statement. What's going on? I know you have some market, you got some perspectives on the market.
Sure.
Let's go.
You know, obviously, we're here and during very, very changing times, and I want to speak to the marketplace and how things are changing. What did Brad say? Don't talk about the internet. Well, I'm here to talk about the internet. I'm here to talk about the changing landscape in retail, industrial, and all the sectors, and what is happening on Long Island real estate. Listen, I envisioned this program 5 years ago. I said there's nothing on Long Island where Long Islanders who care about Long Island are going to come out and speak to what's happening on Long Island. So we put this together with the New York Real Estate Journal last year. I love it because you're going to walk out of here with a lot of information. The bottom line is it's a very honest talk about what's happening on Long Island for Long Islanders. I look around the room and everybody here is involved in commercial real estate on Long Island. So it's just the greatest platform. Michael Sahn is going to say hello. We'll get into some questions.
Mike, fire it up. Let's go.
Thanks very much, Eric, and thanks to everybody for inviting me to participate today with the panelists here and the next panel coming up. I have a lot of friends and colleagues in the room, and I look forward to receiving your questions, comments, and hope we have a nice dialogue. The way I would look at our current situation on the island is we have unbelievable opportunities for growth, for development, for improving the quality of life for everybody who lives here, and yet we have very, very significant challenges. I think we have, as we all know, challenges with respect to balancing development and the environment, challenges to provide affordable housing, yet preserve the housing stock that we have, challenges with transportation, challenges with how the island is going to craft its future. We were, for a long time, very involved in industrial development, manufacturing. The industrial sector is still very strong. I'm sure all of you would attest to that, but we're changing to a service economy. The healthcare providers and the healthcare institutions are expanding greatly. They're probably the biggest growth factor now that we have, in my opinion, in terms of future development. And we have to balance all of those things, and if we can achieve some good results and address some of the challenges that we're going to discuss, we're going to have great success, and future generations will have great success. I also think, and this is the last thing I was going to mention, that we need collectively the kind of foresight and vision that people like Eric provide. And if we had another Robert Moses and thought in big terms, that's what we really need today. And maybe we have to do that collectively. So that's my overview of where we stand right now.
Anthony.
All right, all excellent points, no doubt about it. The island certainly has its share of challenges, but I like to say that seeing all of the new development that's in the pipeline, seeing as robust as the industrial market is, I feel I'm, very bullish on the local economy, the local real estate market, and where we're going. I like to say that Long Island, with its challenges, doesn't need to fully change, but it needs to adapt to the way the economy is going. So if you look at, data trends with our young workforce that are coming out and graduating our tremendous institutions, Stony Brook and Hofstra and all the other colleges that are out here, adapting and changing to the landscape is critical, and that's what a lot of the work that Vision Long Island does. I like to give an example of, you know, if you were a manufacturer of VCRs and VCR tapes and you heard about the DVD or you heard about this thing called Netflix and you said, that's not going to make a difference, you know, I'm going to just, you know, dig my heels in and keep manufacturing the VCR tape. Those companies are out of business right now, and I'm sure they're wishing that they adapt to the new technologies and to the new manufacturing and the new realities of the economy. So I like to say that Long Island and Long Island governments and also the civic associations need to see that big picture and understand that we're not looking to change Long Island's landscape, but we do need to adapt to the new realities. And as Eric said about the leadership that Jack Martins had in his village when he was mayor and then subsequently when he was a state senator, that's what we need to do. It's taking properties that might be dormant, needs to be reimagined, needs to be revitalized, and create different opportunities like we're seeing across Long Island more than ever, where the local municipalities have the political will to get the job done. They're willing to make the tough decision, do it in a collaborative way with the local civic organizations and other stakeholders. And once Long Island continues to grow and these developments take shape and come online, then we're truly adapting to the landscape and really creating that bridge between our young workforce and, you know, what they're looking for in terms of housing and lifestyle choices. So, you know, I think we're on the right track. We need to continue to go down that track, work with organizations like Eric in a collaborative way to make sure that all the stakeholders feel comfortable with the development that we have. But I think adapting to the landscape is something that Long Island should do, and we're continuing to do.
Why don't we start, what areas of the industry do you view are the best investment choices? You know, I read these reports, you know, the PricewaterhouseCoopers and all this, best investment, you hear people nationally, but Ron, you're Long Island.
Sure, absolutely.
What do you think? What's the best investment?
I think, Eric, the question is the entire playbook. I'm about to give away to every competing broker out there where the money's going. So, Guy, take notes,
There's a video
because
camera.
quite honestly,
Video.
there's a video camera taking it. Mike, listen, when we woke up this morning, 10,000 baby boomers turned 65. Between 2011 and 2030, 10,000 baby boomers are going to turn 65. So it's no mystery that 56% of commercial real estate executives, when you ask them what do they want to invest in, they say they want to invest in healthcare product. It's just simple. The numbers are there to substantiate it. The urgent cares are in demand. If you see pro-health facilities, senior assisted living facilities, this is the place where money's going. I mean, when I first came into the industry, it wasn't. You know, and we talk about industrial. Number two, so 56% of executives are looking for healthcare. 53% of executives are looking for industrial investments. Why are they looking for industrial investments? Well, let's talk about it, Brad. E-commerce, an industry that didn't exist, 10, 15, 20 years ago, now accounts for 25% of the entire industrial marketplace and growing. Distribution centers, so obviously industrial is a place where people are looking to invest. Thirdly, Long Island, my home, has always had a single-family residence mentality. I've always heard we don't want to be Queens. We have a housing stock 50% smaller in multifamily than the rest of the country. So on Long Island, a smart investment, 53% of investors are chasing multifamily investments. There's not enough of them. I tell everybody all day long, here's the playbook, Guy, they're gold.
It's the number one, I think.
Okay. Right alongside with that, and maybe it's not so much on Long Island, but throughout the country, because I do study numbers locally and throughout the country, people are looking for student housing. It's obviously part of the same landscape as multifamily. And then we get into what I consider to be the more traditional investments. Downtown office, it really drops off. Only 18% of investors are looking for downtown office product. 10% of investors are looking for suburban office, and the last sector, and listen, things are in transition. I agree with Anthony when he says, we're adapting. Only 7% of investors are looking for retail product. All right, maybe they're a little freaked out when you hear Kmart's are closing and you hear Toys R Us are closing. So the landscape has significantly changed. In my mind, it's almost turned upside down from where I first started in this business.
So you just gave bad news to all the baby boomers in the room and beyond that are now, they're all getting old.
Well, if you were born between 1946 and 1964, you know it.
Yeah, and then you gave bad news this morning to the retail folks. 7%, that's a low number.
Well, listen, it's a changing landscape. It could mean, it could mean opportunity.
Okay. So it's too early for drinks, guys, if you're in those sectors, so maybe later, I'm sorry. Anyway, hey, let's shift a little bit. There was good news in your report, so clearly health, clearly e-commerce, industrial, and mixed housing. So this leads to another question. I'm going to shift this over to Mitch because you're kind of the growth planning guy, working with municipalities, getting project approved, looking at them. So how much mixed-use development or special housing uses, assisted living, or whatever all this is, how much can we absorb in the next few years? Now, just from our perspective, Division Long Island, we've tracked 13,000 units of TOD housing that have been approved, and we see 15,000 units in the pipeline. But that's not counting assisted living and all sorts of other housing and other growth. So what do you see? What can we manage?
From my perspective, Eric, it's limitless right now. Everywhere you look, every municipality, whether it's traditional municipalities like Mineola or small villages, or Patchogue, and it's on the east end of the island, it's in Nassau County. Everyone is looking for other housing opportunities for people. And in particular, around transportation hubs and mixed-use development, so that the downtown areas will have a combination where someone can live with a commercial use in the same building or the same facility. The way I see it now, there is a limitless opportunity for that, and there's a limitless need and demand for it. What we have to do is also provide other opportunities in terms of how we manage those facilities. Traditionally, of course, Long Island has been ownership, but, and I think everyone in the room will agree, there is a strong demand for rental opportunities. We don't have enough rental opportunities compared to other areas in the country. We probably have 10 to 15% fewer rental units available for people than in other areas. I think that's a fair statement to make. So we have to maximize the opportunities. Now, to do it, we need a partnership, in my view, between the developers, the people who live in the vicinity of these new developments, and government, because it's a change. Traditionally, as we all know, land use was divided, so everyone lived in one area, all the businesses were in another area, all the services were in a separate area. That's how land use developed, to separate everything. Now we have to find ways to bring it all together in the same space, in proximity. I think we also need to address, and we have to be frank about it, affordable housing. We have to have a real direct conversation about that, everyone in this room and everyone involved, because if we don't provide opportunities for younger people to be educated and remain on the island, then we're going to have a very stratified population. So we have to look at that, and we have to look at diversity in housing. There will always be a big demand and the retention of single-family homes. One irony about all of that that I see, and we have to think about, is that as we provide more of these mixed-use developments and different housing opportunities, whether it's assisted living or some sort of rental units, will we, in a sense, separate the population so that the people who live in the traditional single-family homes become a different class of people than those who are living in the mixed-use or multifamily developments. It's a pretty difficult challenge that we face, but I think we can look at it as an enormous opportunity.
Well, let me just add something
Yeah,
to that.
go.
With a lot of these developments in the downtowns are, only a few years old. So we've seen the impact of them on the local downtowns, but I don't think we fully have realized their impact in terms of the single-family home market. Because I think one of the strategies that needs to be looked at is, where you have the baby boomer and those who are 65 years and older are different than the 65-year-old in terms of disposable income and lifestyle than it was, 25, 30 years ago. So these folks who now own all these single-family homes in the communities where these revitalization efforts are taking place and the housing stock is increasing, the goal is to really create that bridge between those homeowners who are looking to sell their house, downsize. They love the community that they're in. They like the nightlife and the restaurants. They want to go and take one of those leases on one of those apartments in one of these brand new buildings. And then ultimately, the full circle would be the young renter who now has been in that apartment for a couple of years, has some investment in the community in terms of they want to raise a family now, they want their kids to go to the local school, so then they transition out of the rental and then go into the home that the 65-year-old is downsizing. So those types of things, I don't think we have fully realized yet the potential and see how it's going to positively impact the single-family housing market. I think we're probably another couple of years away from that, but those are all things to keep in mind about how, from a circular point of view of how the local economy and the local community can keep going.
So Anthony, I'm going to stay with you for a second, but just briefly, just give an overview of, because you're the how-to guy. So we know these multifamily and mixed-use projects are coming down the pike. Clearly, thanks to Ron's report, there's some positive things happening in other sectors. So what tax incentives are out there? It's a hot topic, but what tax incentives are out there for folks that may be not steeped in some of this? So what's out there right now?
All right, so typically industrial development agencies, which there are several across Long Island, are able to provide tax incentives and abatements for projects to make them more cost effective and use them as tools to improve the local economy, create job opportunities or housing opportunities. So typically, years ago, you used to just see, large ground-up construction manufacturing operations access IDA tax incentives. Now, it's a bit different. So you can actually have a client that's going in and leasing 25,000, 30,000 square feet of industrial space in a multi-tenanted building. If there's job retention and some job growth there, they could apply for tax incentives through the local IDA. The landlord receives the benefit and passes it down to the tenant so they have lower rent to support the job growth, retention, and creation. In terms of housing, there is always debate in terms of if multifamily housing should be eligible for tax incentives. They are available for tax incentives and abatements through IDAs. IDAs look at multifamily housing as an economic development initiative that's increasing and creating housing stock and opportunities in a local community. So multifamily rentals, not ownership, so no condos, are able to get IDA tax incentives. In terms of retail, which is always an interesting topic.
I'm gonna get to that in a second,
Yeah.
in retail, but yeah.
So retail with IDAs, in order to receive an IDA for a retail, number one, if it's in a mixed-use development, it needs to be about a third or less of the overall project for that project to get IDA incentives if there's a retail component. Retail is supposed to have one of three carve-out exceptions made. It's a tourist destination, and tourist destination meaning that more than half of the users come from outside the geographic region. The geographic region for IDAs is Nassau and Suffolk counties, so Long Island as a whole. So if you look at many retail deals of late that the Nassau County IDA has done under previous administration, they will say that, well, most of the users come from the county of Queens, so it's outside the geographic region, hence the tourist destination, hence they're qualified for IDA benefits. When you're in Suffolk County or when you're in Eastern Nassau, it's a bit tougher to get that box checked off. You also have, if the goods or services are not available in the local municipality, I like to say if you go for a Whole Foods market or some type of retail operation like that in a community that might be a food desert, right, where there's not fresh produce readily available, and or supermarkets like that, you might be able to get an IDA for a retail project like that. And so those are the two kind of like prime ones that folks could use to see if they can get a retail IDA approved. So it's a bit harder. And so in general, it's really industrial properties, it's multifamily housing, it's mixed use, and on the retail side, it's a bit tougher.
Right.
And so services and office buildings, doctors, healthcare primarily, those are viewed as retail too in the world of the IDA.
Great, great. So, all right, I want to talk about retail, because I know this is commercial, a lot of commercial folks here. So I hear different things, right? I hear from some of you guys, retail's fine, like you were saying, Anthony. Nothing to see here. Everything's fine. Everything's wonderful. But as I watch my wife on Amazon Prime, I'm like, we're supposed to go in stores. I work for a group that's downtown. We're downtown people. We're supposed to shop in stores and brick and mortar. We work with all these Nassau chambers of commerce and Suffolk chambers and shop local, shop local. So some of that's happening, but not enough, right? So folks are online. So we got to be real about that. And retail developers sometimes, their vision in Nassau Hub, there was a retail development vision that was put forward and kind of got dismissed because maybe people feel that the future of retail is a little different than what it is now, and there's a lot of vacant boxes that ain't coming back. Now, we're the downtown guys, so our group, so we're not complaining so much about that, but having said that, you gotta look and realistically reimagine where this market's going, where it is and where it's going. So I don't know. So this question back to you, Ron, how's the retail market reshaping their strategies to remain relevant and profitable when competing against e-commerce and Amazon? What are folks doing?
Well, I feel for you that your wife is internet shopping all the time. I got a wife myself that's internet shopping all the time. But let's define numbers. Let's talk in terms of real numbers. How much retail is going online in 2018? Anybody want to venture a guess? How much is happening in e-commerce? 20%, 30%, 40%, 50%? Who wants to venture a guess? All right, the answer is 9.8%. That's it. 90% of all transactions are still happening in brick and mortar. I think the thing that is on the landscape that gets everyone's attention is that today it's growing at 15%. Now that's not 10% plus 15% next year is 25% and then 35%. No. It's growing at 15%, so next year it'll be 11.27%. So let's keep things in perspective. Store openings in 2017 outpaced store closings. Let me say that again. Store openings outpaced store closings. So there are a lot of empty big boxes. There is a lot of media attention to those big box closings, but it is a changing landscape. the biggest number I think that blows me away is that 66% of American households have an Amazon Prime account. So your wife and my wife, they're not alone. 80 million homes have Amazon Prime accounts. I see you smiling. You got the boxes outside of your front door every day also. You know, and what we're seeing, quite honestly, is a very competitive environment. Sony came out with Betamax, and they got wiped out by VHS. Things change. Amazon has the market today. But don't kid yourself. Walmart, Target, Macy's, Apple, everybody is competing for a piece of this pie. It's all about the last mile of retail. Getting the product from the distribution center to your front door in a day or two. That's the person, that's the company that wins. So right now, what we're seeing is that industrial demand because of those distribution centers. So, you know, my feeling is, no, it is not bleak. It is 100% not bleak.
Okay.
90% of all transactions are happening in brick and mortar. And I think that we're going through a robust period where the retailers, the traditional retailers, are catching up and they're starting to compete with two-day deliveries. And they're starting to understand the system, and I think that that's going to roll back. I think 66% is probably as high as Amazon Prime gets, and I do think that Walmart and other companies are going to you know, get into that marketplace and be very, very, very competitive in the future.
So,
Ron, can I jump in on?
yeah, I was
on
gonna
that?
ask you a question on technology, so.
But I want to jump in on,
Sure.
on the retail. Is my perception is retail is changing. What is defined as retail is different now than years ago. To me, the kinds of services provided, for instance, by the urgent medical care facilities, that's part of the new retail. In essence, that's new retail. We're retailing services that previously were in different places. So I consider those kinds of medical facilities as new retail. They're taking up spots that traditional stores took over. Second, I think a big area of retail is in food service. Most restaurants now have delivery in addition to takeout. So, and I just read something where on the East End, there's a new service being developed for really high-end restaurants to deliver. Everybody calls restaurants and has food delivered. I consider that as new retail. So I think we have to change the definition of what's retail. And if you look at it that way, perhaps Amazon is taking a certain sector of hard good retail, but we're also providing retail here of services. And I think that's an important factor. The other thing that I think occurs to me is retail is going back in some ways to what it used to be, which is instead of retail being in the big mall or a big box retail, now you can have retail in your downtown or your local community where, say, Mineola, you have a lot of new housing, but the retail is coming back to serve the housing on smaller scales the way it used to. So I think it's not, is retail dead? It's redefining retail. That's just my perspective from looking at it.
It's happening, it's funny, it's definitely in a smaller scale, and certainly through the food industry, really it's chain restaurants in the malls and the big box stores are kind of trumped with really all the downtown restaurants that are growing all over the place. But this gets us to things like tax incentives for retail. So going over you, Anthony, as far as how to get some of these projects going. You know, the craft beer guy the wine bar, or or some of the local food production that populates our downtowns, how do these, quote, retailers get tax incentives, or can they? I mean, it's a little tricky because, obviously the tax incentives aren't geared towards retail, but these become our new anchors in our downtown places, or even outside of downtown too. Food has become a massive industry. But I don't know. Give us your take on tax incentives in retail in general, or the food piece.
Yeah, I mean, again, it's hard to get around, the carve-out exceptions. In terms of those retail establishments in the downtown, the best way I could say it is if you have the current kind of landscape, if you have a mixed-use building and you have, office and you have rentals, and then the retail is on the, ground floor, at that point you can qualify the entire project for IDA. And then when you get the tax incentives, you're able to lure, attractive tenants into the ground level space because you're able to offer a competitive rent by being able to get the taxes lowered. So I was the former CEO and director of the Suffolk County Industrial Development Agency, and there what we did was, we wanted to, how do we spur innovation? How do we spur, software development, startup companies, incubator spaces? Because having those types of opportunities in the downtown just continuously feeds the retail components of that downtown community. So when I was at the IDA, we approved the first high-tech incubator space in Suffolk County in Huntington Village by creating Launchpad Huntington. So there was, the first floor had retail, and then the second floor was all loft-style startup space for young companies to grow and hopefully one day become a large company, then a large employer for Long Island. So through kind of like creative thinking, you're able to get tax incentives for downtown retail establishments. But in the traditional sense of, I'm a restaurant, I want to go in and get an IDA tax abatement or an abatement from State of New York, Empire State Development Corporation, those just are really tough.
News. Ron, what's happening? What's next? What do you see?
I think the future of Long Island looks great. Listen, we have our challenges. Biggest challenge, I see is the non-deductibility of the real estate taxes. I think that's going to play a huge impact. But the resiliency of Long Islanders and the resiliency of the downtowns, I think the future looks really strong. I do. When we bring to market downtown properties, people in those downtowns, you find a Huntington property, people in Huntington want it. You find a property in Patchogue, people want it in Patchogue. The downtowns are really robust, and I think there are 110 downtowns, to my understanding, and I agree with Eric. The future of Long Island really looks strong, particularly being bolstered, by what's happening in the downtowns.
Well, first of all, thanks again for inviting me. I would say, if I had any takeaway, very positive, more public-private participation, get-togethers, events like this one, events like Eric runs, more kinds of local groups. If we get together more and talk more and involve the civic communities also, we're going to get great results. We just don't do enough of it, in my opinion.
Anthony.
All right. Thanks everybody for coming out and listening to us. I know we have a good panel coming up after hours. Like I said earlier when I started, I'm very bullish on Long Island's future and the current development. There's billions and billions of dollars that are out there of redevelopment and new development opportunities. The island is certainly, readapting and reimagining properties. So I think if we, continue to go the course, we're going to start seeing some more positive impacts on our local downtowns and our local housing markets. So I think we're continuing down the right path. Really positive about the way things are going. Yeah, there's some challenges, but it's refreshing to actually hear all the positive things that are going on and not the constant kind of gloom and doom. So Eric, great job. Thank you very much.
Let's thank these guys.
Yeah, no.
I wanted to go
So I want to just jump right in and get some information about both of your company, all of your companies. So if you wouldn't mind, Danny, starting with giving me an explanation of what CompStak Exchange does.
We are a data company, so the easiest way to think about us is to think about, oh, you're kind of like CoStar, except that we're very different in the way we do business. So we track deals in the market, right? We track transactions, lease comps and sales comps. When a property is sold or leased for commercial property, we collect that information and we offer it to commercial real estate professionals. You know, the way CompStak is different than some of the other data companies that you know in the market is that we actually collect our data in a crowdsourcing fashion. What it means is the brokers and appraisers who are using our database, they give us data and they get data back and they don't pay for it. Now that's kind of refreshing, right? How often do you see a service that offers something for at least a portion of the commercial real estate market for free? So if you work for a commercial brokerage shop or a commercial appraisal shop and you have deals that you closed or deals that you know about, you give us the information and in return you get other information about other deals back. So it's kind of like a free trading of comps. And if you're something else in real estate, you know, if you're an investor or if you're a lender or anybody else who needs to know what's going on in the market, you can subscribe for a fee and get access to the database. CompStak started in New York City. My boss, our CEO, is a former commercial real estate broker. He was with Grubb & Ellis at the time. And we started covering just New York. That was about 6, almost 7 years ago. And then over time, as we raised money and got more customers, we started expanding. And today we're in 70 markets across the country. The Long Island market, we didn't cover until about a year ago, right? We covered New York City, but not so much Long Island. And then we started covering Long Island as well.
And I neglected to say he's the vice president in CompStak. Francesca, who is the CEO and co-founder of Home, if you could give us a brief explanation of what you do.
Thank you. So Home is a tenant experience platform. We focus on on attracting and retaining great tenants for both commercial and residential properties. We started in New York, focused very much on the New York market, expanded up to Canada, now to Seattle, and are only recently getting asked by current clients about expansion here into Long Island. So we're seeing a lot of movement of our existing client base into this area, and we are seeing the need more so in this kind of market than in the middle of Manhattan, where you have access to all kinds of fitness programs and special events going on, a lot of co-working spaces. We're seeing more of a need to activate underutilized spaces, whether they're completely raw, vacant spaces like a vacant apartment unit or a vacant floor of a commercial building, with things like fitness classes and special events in order to create a really sticky tenant experience through technology. So we will collect a lot of data on what's valuable to your tenant base or your prospective tenant base, and create a program around what's valuable to them, and we'll make a really sticky environment for them. So, and then we program spaces. So that's what Home does, and we're really excited to be expanding here into Long Island.
Ronnie is from Best Energy Power, and Ronnie, why don't you give us a short synopsis of what you do?
So Best Energy Power is the biggest commercial solar installer in the 5 boroughs of New York City, and of course we do a lot of Long Island and Westchester. A lot of people know about solar, but when you buy something, actually you either want to feel it, touch it, or you want to visualize it. So solar is all about the numbers. And numbers in Long Island for solar, commercial solar, is a 5 years return. Or in other words, 20% return of investment. Where can you get today 20% return of investment guaranteed? And when I say guaranteed, as long as you use the electricity is guaranteed. So anybody who owns a building, of course, wants to operate, and always one of the key of operation is cost of operation. And energy and electricity in particular is a big factor. Lately, we hear a lot of increased demand for electricity. We are going to have more electric vehicles. There are no more new power stations being built. So alternative energy or renewable energy is the right way to go.
When you were speaking of that, Ronnie, what are the little more detail on the economics of commercial solar? I'd like to know what is the ROI on that?
So when I say the ROI is 5 years, it's very highly subsidized. It's about 50% subsidy between federal, state. Some cities are also trying to help, more in the 5 boroughs of New York City, less in Long Island, but still with the federal and state subsidy, basically the government and the state are telling you, we need you to invest in solar, and that's the right way to go. I'm sure you all heard Indian Point. The nuclear plant is going to be closed in June of 2019, after I believe 3rd or 4th extension, so they are not getting any more extension. The nuclear plant is 33% of so-called downstate, Long Island included. That means after they close, we'll have to import power. Import will cost additional cost. So there is an additional cost to get some more power. That means, again, increased cost of operation. That's the reason of the subsidy. This is why the state and the government are telling you, we need you to go, we need you to do that.
On the customer user side, why is it important to be early adopter of technology?
Okay, so, you know, I mean, I think it really, there are a few reasons for that. You know, and I think all of us sitting here in the table kind of represent new ideas, or, you know, relatively new ideas and new strategies that could be implemented. I mean, you know, we're all in business, and, you know, when you're in business, you always ask yourself, what's my competitive advantage? How can I be better than my competitor? What's the difference? Because if you don't have a difference, then you're basically a commodity. You know, you're the same as the next servicer, and then it becomes a price war if everybody's the same. Now, early adopter of technology, the key is there's something new that came to market. Most people are still not using it, right? So you can say, you know, here's a data company, here's a you know, fitness, health company, here's a solar power company. Maybe a lot of your competitors are not using these different technologies, and so it gives you an advantage, right? So in our case, we're a data company. Let's say you're an investor or a lender and you're looking to underwrite a property, or you're looking to benchmark your property against the competition. Maybe you want better data. Hey, what's going on out there? What are tenants paying really in rent? How's the market moving? Maybe the current data provider that everybody else is using is not giving you accurate enough information. If you try something new, it gives you an advantage, right? I mean, I think everybody sitting at the table here could probably argue how, you know, trying something new gives you an advantage.
Well, there's always differentiators. We're always looking for differentiators so we can stand out, and utilizing new technology would give you a potential differentiator, correct?
Oh yeah, absolutely. And here's another extra bonus when you are thinking about, I mean, what I just said kind of relates to any kind of early adopter of anything, right? But when you're talking about technology in particular, for everybody who's working with clients, who has customers, which is I think everybody in the room, I think typically your clients want to know that they're working with the most cutting edge company, the most cutting edge service provider. And technology really ties into it. You know, when you go into a client meeting, existing client, new prospect, and you tell them, hey, you know what? I'm also using, it's not just something new that I'm using, it's the latest technology, right? Technology is so much around us and everybody's so aware of it And when you go to a client, you can really wow them with showing them, look at what technology tools I'm using that, you know, as a result, I will provide a better service for you.
Yeah, like the earlier panel had indicated about just staying with the times, moving along with it, because if you stay solid where you are, you're going to miss out, you're going to end up closing, so we don't want that to happen.
Yeah, just to button that, the long-term play with any of these services or any of these technologies is always data, getting a better understanding of the prospective tenant or the current tenant, any way to incentivize that communication, collect that information in order to make smarter, more efficient decisions is always the play with technology. So exactly what you were saying, data in order to incentivize efficiency is always the play. So.
Well, on that, Francesca, would you tell us a little bit more about your company's value proposition to landlords?
Yeah, so we not only provide the technology, but we also provide the services. So we saw it necessary, especially in larger commercial properties for security reasons, to not be outsourcing the actual service itself to independent contractors and a variety of multiple malleable service providers. So we employ all of our service providers as well as provide all the marketing and technology. By doing that, we're both able to service a property in a way that's really attractive and sticky for the tenant, but also provide a lot of back-end data to determine what actually we should be providing in a property and what is actually financially valuable for a landlord to provide in a property as far as tenant experience through collecting a lot of data. And a lot of the times when we're able to offer these comp services directly to tenants, we're able to provide a really low barrier place for collecting additional information on tenants. You know, what it is they're looking for, even as far as infrastructure in a space or as far as you know, who they'd like as a multi-use retail tenant on the first floor. We're providing a lot of data that we're able to collect because it's a low barrier point of data collection for these tenants, right? They're signing up for a free yoga class on Tuesdays. You can ask them anything that we want. And so it really incentivizes the communication, especially in commercial where there's you're three layers out, right? There's the landlord, then there's the tenant, which is normally company, sometimes not even on site, and then there are the employees that you're actually trying to service and keep in the space, keep happy, give a really great experience to. We're able to incentivize a lot of that communication through our tenant platform.
It's funny, I just recently had a conversation with a couple of colleagues, and they're looking at different places to relocate to, and one of the employees said to me, gosh, I hope they go to this building because they have this workout system in there and then I don't have to leave, and that's what you're speaking about. So
yeah, and we saw that when we first started, we were providing live programming directly to amenity managers. And we saw that a lot of properties might not be willing or able to invest in a full retrofit of a space. So there's a lot of buildings that do have a full service gym, do have all the bells and whistles all the way to, you know, the golf simulator. But there are a lot of properties that have a lobby that's empty 24/7 or have a vacant apartment unit consistently that can be programmed with things that are low cost that really make a difference. If we retain 3 tenants within a year, the program pays for itself. So we saw that there was a larger opportunity to amenitize some of these properties in a non-traditional way. May really make use of underutilized spaces.
yeah, it definitely makes sense. Well, and Ronnie, with all new development in technology lately, how do we know that in the short while after we put in a solar system that it's not outdated? How do we?
That's a great question, because the first question that every building or property owner asks, okay, what about the maintenance? Like long-term maintenance. So I'll be a little sarcastic. The only maintenance you have to do on a solar system is once in a while take a look at it and say, wow, how beautiful it is. There is no maintenance. And I'm sure all of you have like that small calculator, desk calculator, with that small strip that works on light. And you have it for 10 years, and it fell on the floor, and you spilled some coffee, and yet, whenever you push on, it works perfect. No degradation, no cleaning, no maintenance, no nothing. Think on a big scale, you're going to put it on the roof. Or even think on a bigger scale, think on all those satellites turning the globe for 30 years. They are all powered by solar panels. There is no degradation, there is no maintenance, there is nothing. There are no moving parts in solar panel. And that's the beauty of it. You put it once, you have an automatic monitoring system, so whenever there is any kind of a problem, it's going to alert you, it's going to alert us, the installer, and even the manufacturer. Solar panels are warranted for 25 years. And the 25 years warranty is on the output. When you buy a solar system, basically you don't care about the solar panel, you care about the output. That's what you buy. And given the 25 years warranty, it's a very, very strong statement. Nothing is going to happen, because these days, somebody giving you 15 years warranty, you'll be very, very happy. Going the extra mile and giving you 25 years warranty, it's a very strong statement. No maintenance, nothing is going to happen. Think about the weather lately. We have the record of building the highest system ever built in North America on the Atelier building. It's in the city on 42nd Street, 46-story high. We built it in 2010. We had 2 hurricanes already. It didn't even move. Actually, after Sandy, which was severe over here in Long Island, you didn't hear any problem with solar panels flying in the air or any kind of a damage. That's the beauty of solar. You put it once, zero maintenance.
But what happens if there's a grid outage, or is there any negative impact to that?
There is kind of a negative impact because utility workers are actually protected. And that brings the next generation of putting batteries. There is a law which is called net meter. Net meter, on average, go backwards, I'll give kind of a regular solar 101. We calculate in this area 4.5 hours of daylight on average of 365 days. So when you hear 4.5 hours, it sounds very low, but it's an average. December short day, June long day, cloudy days, snow days, bright days, nice days. So everything is calculated as an average. Basically in the summer, because of a longer daylight, you're going to produce more than what you need. And there comes the law of net meter. So all the overage that you produce goes back to the utility. That's called net meter. So the utility is actually used as a bank. You store the kilowatt over there, and then you take it when you need more, either the first night or basically in the winter time. I'm telling you all of that because if the system is going always to export, what will happen in an outage? The system in the summertime, system is going to produce, going back to the utility. Now, if the utility comes and fixes your next door neighbor and the system, and they shut off the utility, the system doesn't know if it's utility related or weather related, so it's going to export power. That kind of electric power employee is going to be electrocuted. So basically, when there is an outage, the solar is going down unless you put batteries.
Okay. What value do you bring, would they get from CompStak?
Everybody who has a need or an interest in market data, basically, if you want to know what the rental market's like, or if you want to know what properties are selling for commercial properties, there's value in it for you. So just to give a few examples from some people who may be, some groups that may be sitting in the room. I'm going to start with brokers because, those are the people that I speak with the most. If you're a broker, whether you're representing a landlord or a tenant, you got to know what the market's like, right? You have an existing landlord as a client, and they ask you, I want to put a space up for rent or for sale. What can I get for it? If you're a tenant rep, you gotta show them that you know the market. So obviously you need market data. You need to know what kind of deals are taking place in the market, what tenants are paying, what properties are selling for, et cetera, et cetera. So that's kind of the first group I would.
So what's your process? I deal with a lot of data, obviously, in marketing, and I have different suppliers that offer me data, and I'm very particular over how they get it, how they obtain it, how they process it and provide it to me, because that really changes the outcome of our banner ads and other things that we utilize these data information for.
Sure.
So how do you go through your process? Well, how do you get that information that provides the value to our users?
Yeah, so I think the easiest way to think about it is to think about how it's been done and how we're doing it. How it's been done, and I'm going to basically say there's a big data company in the market that we all know and some of us use, and it's CoStar. How does CoStar get transaction information? If you're a broker, you pay CoStar whatever it is every month or every year, and they so basically they charge you for the service. But they also, every time you close a deal, they'll give you a call and ask you, hey, you closed this deal, what did it sell for? What did it rent for? You're less incentivized to give them the information because as a customer of a service, you're saying, wait, I'm paying you. Why are you charging me X amount of dollars? And then you're still calling me to ask me about my transactions, and then you're selling it back to me, right? So our approach is very different. We still get the information from the people who do the deals, right, the brokers. We also collect it from appraisers, but the incentives are very different. We don't charge you anything. You give us information, we give you information back. So all of the data we have, all of the comp data we have is crowdsourced. In other words, it comes in droves from brokers, from research managers, from appraisers who track comps in the market. It doesn't have to be your own deal. You might know about a deal that somebody else did. Maybe you keep some sort of a database of comps and you give the data to CompStak. We give you credits for your data. You go back and you use the credits to get comps back. It's basically all web-based. It's a website you log into, you do a search. So I think it's kind of unique in the sense that our members are the ones providing us the information and they get information back and they don't pay for it, and then we make money by selling it to investors, right? So our members are mostly brokers and appraisers. We also get some public data, right? Some public record data, but really the beauty of it, think about something like Wikipedia or anything where a very large group of users, a network of users have information and there are pockets of information. Everybody has a piece of it. What if they all come together, everybody provides a piece, and then they're able to build a really large database? And this is where it comes from.
Yes, it makes sense, because instead of having data all over the place and trying to pull it, you're doing it for everyone and utilizing your memberships and partners to reciprocate back and forth, but that provides really detailed, accurate information, as opposed to some of the information on the internet may or may not be accurate if you're pulling it from different areas.
We have an amount of detail, especially when it comes to lease comps, lease transactions, that really you're not going to get. That's not a publicly available information.
You drill deeper, correct?
Yeah, absolutely.
So who are your clients and what makes a successful relationship, especially with what you're doing, because it's very unique, it's very, as all of the panelists are, you're offering really state-of-the-art technology that's cutting edge. Tell us about your clients and what's successful.
Yeah, so we work with normally larger scale property portfolios. We normally find a lot of success in portfolio-wide rollouts. In New York, being able to create a consistent experience across all their properties and really attract the same tenant base that they have in Manhattan, out to Long Island, out to Jersey City, everywhere they're located. What we see in a really successful partnership is somebody who typically has installed a single community manager or tenant experience manager in a single property and has kind of tested the value of some of these programs and then wants to scale that across the entire portfolio. So we normally come in at the point of scaling these pilot programs that they've already tested in-house. Also, a really valuable piece of the partnership is, I just keep going back to data, is looking at us like a partner, looking at us as a resource for collecting information that makes our service really sticky also to the client. So if you really want to understand X about your tenant base, looking at us as a potential resource for finding out that information and coming to us with questions about what it is that's making tenants move out, where people are going, what people are looking for in their neighborhoods, variety of information like that, looking at us as partners and resources for collecting more information on your tenant base.
No, and I know you definitely go back to data, and I appreciate that. We all live in
Always
that
back to data.
Yeah. I have a visual of that open lobby, which is beautiful, it's magnificent, it's really, it sets the stage for when you go in to speak to whoever it is you're going to see. However, how do you retrofit that? What do you do to change that space that doesn't take away that moment of awestruck, of being overwhelmed in a good way, in that marketing way that I love so much, it gives me the warm and fuzzies, but in the way that it doesn't take away, doesn't detract.
Yeah, so everything that we do is pop-up and completely mobile. And a lot of the technology we've built is not actually user-facing. It's client, it's admin team, and it's service provider facing, so that they can be as informed about the property as possible, so that they can work very independently. So we're able to pop up and move space to space. So we're in a vacant lobby for 2 hours running an event, and then we pop up and we can move to a vacant floor where we're running fitness classes 3 a day. And we're very mobile. The entire idea is that everything can pack up into what we call our mobile homes, because we love our puns, and kind of roll space to space. And a lot of the technology, a lot of the data that we're providing our service providers gives them the opportunity to kind of navigate the space independent of on-site staff. So that's a lot of the databases we're building are about really mundane information, like where are the bathrooms and what security access do I need to go floor to floor, things that are really particular to real estate, that if you just onboarded a single tenant manager, they would know intimately because they're only in one property. But then if you try to scale across an entire portfolio, really get lost in the shuffle if one person's managing 12 properties, like our technology can do. And then additionally allows them to, again, work independent of the on-site staff, so that we're not creating additional burdens and additional work for your on-site staff, like your front desk and onward.
Do you have a minimum space requirement?
We do not have a minimum space requirement. We've joked a lot about programming elevators. We're like, oh, elevator's an amenity. Sure, yeah, we can program that. If you can stretch your arms out, we can make something happen that will attract tenants and be strange. But a lot of landlords don't take us up on that.
Really? Yeah.
Ronnie, and Francesca, does the solar, would that work in conjunction with what you're doing? Because that is sort of an amenity.
It is an amenity, yeah, and it's something that we could, a lot of programs that we want to, that the building employs and spends the money on employing for the good of the property and for, also for marketing. I mean, it's a great marketing tactic. This is a green building. Normally those things don't get communicated down to, especially the employee level in a property. And it really represents the property very well. So a lot of what we do is communicate those messages, or if it needs employee or tenant participation, oftentimes we'll incentivize that participation upward to the landlord.
And statistically speaking, both of those amenities are things that our millennials and our younger employees are looking for. They don't want to go to buildings that don't have these type of amenities. They don't. And the person I was speaking to, he was 27 years old. They look for that. They're looking for their quality of life. They understand that they're going to spend a certain amount of hours at work. They understand that their time is valuable, so traveling to another location to do the same thing they could do right in that same building is something that's very desirable. And then being green, it's really important to them. Giving back to the community, protecting our environment, really, really important to that group. Not saying that it's not important to all of us, but they're very laser focused on that, and they will take or not take a job. And we see a lot of numbers going up in retention for those companies that move into buildings that have these type of amenities.
Definitely, I want to add, green building, the young generation these days are looking for something related to green. You have solar on your building, you have an advantage in terms of rental to get better kind of a customer and better reliable. That's the kind of customer or tenant that every building owner wants. And it's a very good point to attract that generation.
Yeah, and landlords are also looking for something green.
Yeah,
well.
and
Absolutely.
there's nobody in this room that doesn't know the name WeWork, and you're immediately looking at WeWork and you're thinking, it's obviously, they do have a lot of green initiatives. They're very focused on their tenant experience. It's a very cool place to be. Everything is at your fingertips. And when you're a large company like a Heinz or a Brookfield, and you're attempting to compete directly with WeWork as they bring on larger and larger companies into full floors or multi-floors, or they've developed their Powered by We program where they're powering full single-tenant properties. The way to compete is to engage services like ours. And you know, we see in buildings all the time, we'll walk into a property and we'll say something about our programs being provided by Heinz or Brookfield, and almost 90% of the time people say, oh, I didn't realize I worked in a Brookfield building, or Heinz, the ketchup company. And so when you're thinking about flagging and you think about the success of a brand like WeWork, where you immediately are attracted to WeWork and the ideal around WeWork, and then you look at a Heinz and people think it's a ketchup company. You know, when you're talking about flagging in the future and really creating a strong brand, these things really set large companies apart.
Well, to that end, talk about some of the trends you're seeing.
Oh, for us?
Yeah.
Well, the consistent trend has always been yoga and meditation in the workplace, and then yoga in residential. No matter what age group, what demographic, no matter what property we're going into, we're always trying to do new and innovative things. And every time we collect data, people just want their workout class in their home or their office. So that's always the major trend. The most popular things, obviously, from an infrastructure amenity standpoint, is always a gym.
Do you have anything else that you offer that you want to let them know about that really differentiates the data?
Well, I appreciate the shout out, by the way, so thanks. No, I mean, we're a data company. If you need real estate data, come talk to me or go to our website. It's just about knowing what's going on in the market, what deals are closing. But that's basically it.
Look, like I said in the beginning, it's all about the numbers. Because solar is electricity. You cannot touch it, it's hard to visualize, it's all about the numbers. We'll be more than happy to give free estimate to any buildings, and once you see the number, it speaks for itself.
Yeah, and if you're looking to amenitize any property, learn a little bit more about your tenant base, provide a really sticky experience, attract better tenants. I could just keep listing things that we could help you with. But feel free to reach out, communities@imhome.com.
And you're just in the New York market?
We're in New York, Toronto, and Seattle. But New York, we're currently in all over Jersey, Queens, from the quote before, we don't want to be Queens. We also service Queens, and Brooklyn, and recent expansion into Long Island.
I guess the one thing that I want to leave people with is this, and for what it's worth. Right now in the commercial real estate data market, there's a big monopoly that is kind of squeezing everybody out. It's not good for consumers, for you guys, to only have one provider, one big provider of commercial real estate data. If you check us out, help us out with data, become customers, you're helping create an alternative. And what happens when there's an alternative? It's better for the customer, better for the end user. We're a economy that's built on competition. So I'm happy to compete.
It's great. I really want to thank everybody on the panel. Let's give them a round of applause, please. I want to thank the New York Real Estate Journal for having me today. I really appreciate it. Thank you so very much. And again, as a marketer and a strategist, if I can help anybody here, and if the panelists can help anybody, we would really appreciate you considering us. And we hope you have a really good day. Thank you for joining us today.